Hey everyone, welcome to the Your Money Life podcast. We are now on episode 243 of the podcast. Of course, as you know, wherever you're listening, make sure you like, subscribe, 5-star, rate, and review this pod wherever you're listening. So you make sure you do that every week, especially if you're watching on YouTube. We love the people that check it on YouTube, being able to see our screen and see what I'm sharing every week and what I'm trying to elaborate or any point I'm trying to drive home because we have a bit to talk about this week. Let's first dive into, like we always do, the stock market. So actually, the stock market just opened. It is 9:33 here in New York when I'm finally getting to the chance to record on a Thursday morning. And if you look at it, the futures are up pretty heavily. So the futures were up heavily. The market opened at a higher bullish to highish bullish effect. A lot of the stuff that's been coming on, we know the 50 basis point reduction from the Fed that was announced. And so that's trickling into, factors in what investors, which was actually kind of a surprise. So that's trickling into the market. We also know there's other ramifications for rate reductions, which could be mortgage rates, could be savings rates going lower. All these things are ramifications potentially for the Fed aggressively cutting rates because the economy is slowing. But we did see that we got a final reading for second quarter GDP, which was unrevised at a strong 3%. So second quarter GDP was 3% growth, which is pretty strong. 3% year over year, it's really strong. We're also seeing other manufacturing companies and semiconductor manufacturing companies trading higher on some of their earnings. But again, the two linchpins that people are watching is what the Fed is doing, which we saw a surprise last week, and then also what the economy is doing, the broader economy, and how the broader economy is reacting to some of the acts that the Fed will be making. So it's going to be really undecided if how much we've have factored in so far. You see here analysis saying that what stocks do in the next month is a bit of a coin flip. There's a repositioning that took place, and they're also seeing that 40 days until some different changes politically. So potential changes politically. So that's the big news economic data. We still have jobless claims that came out, durable goods. So nothing crazy. The big linchpin was last week or when the Fed announced what they were doing. And since then, we've really, the market's been kind of flat. Today, we have a decent, rise in the market. We'll see if that holds throughout the rest of the trading day. But again, the two issues are how is the economy doing and what action is the Fed going to do to support the economy now that they feel like that inflation is in a much better space than it was 1, 2, 3 years ago. So those are the huge items on the market. Again, let's go to the market trade so far in the last 5 days. Exactly, last 5 days flat. Again, you see today S&P is up over 0.5%. And so nothing crazy. Last month up over 1%. So again, it's been a roughly good time for the market. Year to date in the S&P 500 over 20%. We're almost in the fourth quarter. It's been a strong year for people that save and invest, like we've always preached about. And that's, long-term trading, long-term investing versus trying to do something short terms, which is never really works out for folks, right? If you flip a coin on any day, the market has almost a 50-50 chance on that day, almost. It'll be a little bit higher, 50% on being positive. But if you flip that same coin, or if you go over, a period of, a month, a year, 5 years, it's the data heavily skews towards the markets being positive over those time frames. So, stuff to note. Let's look at what's going on with Amazon. So we mentioned last week that Amazon is doing the return to office, and that starts January 1st for them. Some Amazon employees are holding on hope that its full-time return to office may be reversed. There's a survey created by employees of the tech giant, and it was viewed by Fortune magazine. The return to office policy ranked 1.4 out of 5 on average, with 1 representing the highest level of dissatisfaction. Fortune notes that workers opposed to return to office may have been more likely to take the survey. So, of course, people leave a review when they're angry or when they really liked it. But it looks like Fortune did the survey. They did a survey internally, and Fortune got a handle on it. And they said that they didn't want to return to work. They're dissatisfied with it. 1.4 out of 5 average. Survey organizers intend to present the results and alter their policy approvals to company leadership. So they're saying, hey, we don't want this so far yet. Hold on, pause, take a breather. We're not sure we want to do this. that's the employee saying, the management's like, we are doing this January 1st, get your butt back in the office. So we'll see if that makes a little bit of change. This is CEO Andy Jassy. He's a big thing. I don't think he buckles if he buckles off of a survey. He's gonna just pretty much said, hey, if you guys don't like it, tough luck. He said that before. And the CEOs have said that before. You guys, they're saying you should be happy. You have a job at Amazon, Google, Facebook, any of these places. And that's what I think he's gonna say. But we'll see. They're trying to say the survey and they're trying to highlight the work-life balance. Everyone knows it. If you can work from home, it's a much, much better. Let's just be honest. I think flexible for some people might be good, but I just can't not. I just love working from home. I work from where I want to, when I want to. And yeah, I don't know. It just seems like it would be tough to have done, was it two, three, how long have they been work from home? Like 2 years now? It'd be tough to have that transition back. So we'll see. We'll see how that goes. More tech news. Google is paying to rehire AI pioneer. Google is paying 2.7 billion essentially to get back a former employee who had kicked off the AI boom before leaving the search giant out of frustration. So Noam Shazir, he founded the company Character AI in 2021 after Google declined to release a chatbot he had developed. Now he's helping to lead the giant's development of the next version of Gemini, Google's most powerful technology, AI technology. The deals to rehire him included licensing the smaller company's technology, a strategy deployed by other tech giants to circumvent regulatory approvals needed for acquisition. So he was working at Google, created this chatbot, AI chatbot. He wanted them to release it. They said no, so he left, did it on his own, and now they're pretty much hiring him back. I mean, that's a win for this guy. It took him 3 years, what, 3 years to make lots of money. They bought his company, or they're licensing his company over a period of time, it seemed like, and they did it for 2.7 billion. That's a big win. How did this guy? He just said, "Hey, all right, I'm gonna leave," and now he comes back to 2.7 billion dollars um, for this AI technology they want to license. What a win for him! No, what a win for him. Applaud for him. That's how you do it. That's how you make your move when people are not allowing you to do so. Speaking of more AI, OpenAI is going from a nonprofit to a for-profit. Remember, OpenAI started with a bunch of tech leaders. Elon Musk and all those guys are part of it. Sam Altman, notably one of the heads of AI, and they were supposed to be a for-profit or nonprofit and open source and allow everybody to collaborate and do this thing and figure out AI together. But recently, of course, they're going to a for-profit model. OpenAI is exploring a plan to restructure its primary business into for-profit benefit corporation, according to Reuters and other outlets, citing anonymous sources. The move would grant CEO Sam Altman, equity in the artificial intelligence startup for the first time, a 7% stake, and this company's worth $150 billion valuation. So he's going to have a lot of billions on his hand after this. So the discussions are happening just as OpenAI Chief Technology Officer Miro Murati has announced she is leaving the company to do her own exploration. Two other executives are leaving. So pretty much the for-profit people, the nonprofit people are leaving as they shift to this for-profit model. And Sam Altman, of course, staying on, getting a 7% stake, and they're going to raise a bunch of money to really attack their version and goals for AI. So a lot happening in the AI landscape, and this is some of the news of what's going on. Let's see what else is triggering current news and debates. So I don't know if you guys saw this. Um, the DOJ, the Department of Justice, is suing Visa. So Visa, of course, you know what Visa is, card company, payments company. The Department of Justice is saying that Visa has a monopoly on debit card swipes. So it's obviously the world's largest payment network. And once this announcement came out, the stock dropped 6%. The department is accused of smothering its competition. Visa makes money on every swipe of its cards by charging banks and merchants for using its payment network. The Department of Justice said that Visa's practices have led to consumers and merchants paying billions in extra swipe fees. So, merchants and banks pass along those costs to customers either by raising prices or reducing quality of the service. As a result, Visa's unlawful conduct affects not just the price of one thing, but the price of nearly everything. And you see this chart's interesting. This is debit is the biggest part of Visa's business. This is nominal payment volumes by type. So commercial, credit, debit. And you see debit's that larger in the blue, credit also pretty large, and then commercial the lowest. But every swipe we do at any of your merchants, you buy groceries, any of those things, they're getting a pay for that. And that's just, and the Department of Justice saying, hey, this monopoly esque type business is hurting consumers because retailers and banks, of course, they're passing the fees on to us because of we're the end user and we need these things, right? And so that's going to be one to follow pretty closely. I don't know what they do in the situation, but Department of Justice looking in. Um, and really, what another crux of the Department of Justice alleging is that Visa has made agreements with other financial service companies that prevent them from threatening its position. Remember, open free competition, market competition within companies, it's what's best to drive the best end result for consumers, right? If you have open or free market, people can price things differently. They can lower prices to get more consumers, supply and demand, economics. But the Department of Justice is alleging that Visa isn't allowing for that. And so that's where the suit comes into play. You saw that Apple agreed to not directly compete with Visa's network. Visa has tried to buy company like Plaid, which now went to Block. But the Department of Justice sued to stop the Visa buying Plaid in 2020. So they're keeping their eye on Visa. They're keeping their eye on Visa. So we'll see how that one plays out. I think that's gonna be a really, really interesting story going forward. Let's see what else. More Twitter hacks. Couple tweet companies' tweets got hacked. Um, and in other news, we are seeing yes, OpenAI's account was hacked. There's some Twitter hacks happening for big accounts. Usher's account was hacked, and it's pretty much a crypto scam. Some people, crypto scammers, get a hold of these accounts and start posting different crypto related things. And so you're seeing that across the board here. So, anything else that I saw in recent news? There wasn't much more in recent news. Let's get into our question of the week today. It's going to be an interesting one, first and foremost. Our question, first one, is really an interesting question. It is what percent? Let's go to the first one. I like this one first. Let's get to this one. It's credit related. How long does it take to establish a credit your score, your first credit score? I think this is a good one. You'll see younger kids, whether they're teenagers or young adults trying to establish a credit score for different reasons. Maybe they never had a credit card. Maybe they just had a debit card from their parents or a credit card that was in their parents' name. But how long does it take when you want to establish it? This is good to tell your kids. And the answer, if you're guessing, is 3 to 6 months. It takes 3 to 6 months to establish a credit score. And really, the time it takes to build good credit can be different for everyone. But it generally takes about 3 to 6 months to get your first credit score. The time depends on factors like um, how you manage your debt, what your credit score is now. This is from Capital One, right? So Capital One saying it takes about 3 to 6 months to establish your first credit score for those new people that don't have that yet. So take in mind to that. That's an investing question. I like these investing questions. It's always about what would happen if you invested in X 10 years ago or a decade ago. This one's an interesting one. If you invested 1,000 in Netflix 10 years ago, what would it be worth now? So we're talking about long-term investing and making the correct investment. Um, Oh, interesting. That 1,000, excuse me, if you invested 1,000 in Netflix stock 10 years ago, what would it be worth now? The answer is $10,260. And that is of September 2024. Comes out to an average annual return about 26%. So again, a good investment 10 years ago for people that had invested in Netflix. And really, the basis of that is, it's a great company, right? Like, not every company that you invest in is going to have great returns, but some companies will. And the fact of the matter is that Netflix was one of those companies, right? And so it's really interesting to look at those things. Of course, hindsight 2020, it's always something like that, but it's always good to remember the long-term perspective that most people forget to have in investing. They forget that they want money quick, they want money now, but they're not really to take the work and the long-term approach that it takes usually to make sizable returns, right? Sizable returns over time when you do little things day over day. That's in all areas of life, right? You'll see that. So always good to know and always good to keep in mind. Of course, folks, make sure you like, subscribe to this podcast. We do this every week, and we will see you next week.